Marsh from the United States joins us this week on the show. We have Craig and Rick from Marsh US. Let's get right into all the trials and tribulations that you, as a transportation company, are facing in the United States.
Welcome to the Trucking Risk and Insurance Podcast.
Craig, can you please introduce yourself?
Happy to do so. Craig Dancer here with the Marsh Transportation Practice. I'm domiciled here in Washington, D.C.
Oh, damn, there's lots of stuff going on in Washington, D.C.
You help all this talk for nothing.
Rick, welcome to the show. Can you introduce yourself?
Sure. Rick Reinoehl. I am the National Transportation Industry Practice Leader for Marsh, and I'm based in Chattanooga, Tennessee.
Well, Chattanooga sounds a little more or a little less exciting, perhaps.
Less stuffy.
I'm okay with that.
Damn, it's going to be fun.
Yeah.
Look, we're talking about transportation. Marsh is here. What are some of the biggest risks facing the industry today? How about I throw that at Rick?
Fair enough. And a big part of our lives, obviously, are nuclear verdicts, which is getting to be a bit of a tired topic, but it's really not going anywhere anytime soon. And there's, hope. It would be nice if there was a silver bullet, but it's not. This is down and dirty in the trenches, inch by inch kind of work, I think, to protect ourselves. And unfortunately, the new term that a lot of people are using, which is the product of the nuclear verdicts, is nuclear settlements. Because we get all these advertised nuclear verdicts thrown at us. We don't know a lot about defense verdicts. Sometimes we get them. And we certainly don't know what's going on with settlements. We're all influenced by these giant verdicts. And there's a tendency to pay more than we used to for settlements. So nuclear settlements is the word today, which, of course, in turn, pushes the insurance market. Prices are up, deductibles are up, and it's hard to figure out where you want to fit in terms of moving your deductible up in today's world from 5,000 to 100,000, 100,000 to $1 million and on up. And that's a new way of doing business. And that ultimately, those that do that well, even if they don't want to, we're stuck with it. Those that do it well are going to excel. That's my take on that.
It's funny because I remember when I got into the insurance world 20 years ago, there was a term called shock loss. Anything over $1 million was a shock to the system. And it's funny because here we are 20 years later, and I'm still seeing a lot of trucking companies that have the same limits they did 20 years ago, but those losses are no longer a shock. They've become the nuclear type, right? So,
yeah.
And it's just unfathomable how trucking companies are not taking a lot of this stuff seriously.
To me, it's the issues, as Rick said, there's no silver bullet on the horizon in terms of legislation. I mean, a couple states, Texas, Florida, Iowa, have passed some level of tort reform, but it's going to be a wait and see to see what really genuinely happens. And, not to feed the enemy, i.e. the insurance companies, but, they're to their position. Unfortunately, when you look at the trucking environment and the legal environment that we're in, there's very little from a defense standpoint other than getting much better defense counsel involved. But frankly, from a legal perspective, there's very little positive on the horizon. There might be some level of tort reform at a federal or state level that's going to necessarily mitigate or limit some of these shock losses, nuclear, thermonuclear verdicts and settlements. I think, to your point, some of the trucking companies have taken a position, and again, the non-public traded ones, these would be more your family ones and maybe some of the smaller ones. They're just not going to buy more limit because their philosophy, they'll say is, I'm just going to be asked for what my insurance limits are. And then then lo and behold, the creative plaintiff attorney sues me exactly for what my policy limits are. But I think what companies have to be concerned about in today's environment, though, is particularly if you're a larger company and you have assets, and meaning like you have more money than just a bunch of debt on your leases for your trucks, they're going to go after you if the accident's bad enough. They're going to go after you outside of your insurance limit.
Yes, yeah, and that's not only going to have an effect on your operational side, but if they take you down, all those people that work for you now are out of jobs, you know? So it doesn't take much very quickly to go down.
Well, what's
Agreed.
happening now to commercial auto insurance market? Because, sorry, and let's just briefly define a nuclear verdict. Generally, as I understand it, is anything that settles for 10 million or more. So how is this all affecting the commercial auto market right now?
Greg, you want to go? Yeah,
Yeah,
you go.
I'll chime in there. Yeah, it's, you know, if you look back the last 10 years, actually more than 10 years, you're seeing sort of a consistent rate increase on average in excess of 10, 15%. And yet insurance companies are still running what they refer to as combined ratios, which is the amount of premium that they take in versus the amount of loss and expense they pay out. It's still exceeding 100%. So, you know, you could say the 10% compounded annual inflation rate on just this, just to begin the conversation still isn't enough for these insurance companies to make money. Now that's looking at it writ large across the market. Obviously some companies are doing better than others, but you know, as Rick said, it's you're having to adjust to take more risk yourself as a motor carrier, not because you want to mitigate the cost. It's because in many instances you have to, because the insurance company is not going to give you that same deductible year over year.
Mhm.
So that's been the biggest ramification. The second piece is really the amount of limit that's available. I mean, I would say, you know, to our largest motor carriers, you know, back prior to 2018, 2017, you could go out and buy $500 million of insurance coverage. Today, you'd be lucky to be able to buy 250 million.
Mhm.
Yeah, it's the market is, to say the word interesting, I think. So,
I'd say back in 2019 or 20, when it really started to harden, I'm not aware of a large motor carrier that didn't significantly reduce limits. And I think everybody's as low as they want to go for the most part. Not everybody, of course, everybody's a little different, but in general, we're not seeing much more reduction. And Craig, maybe you've had a different experience. The conversation seems to have been about, all right, we're as low as we want to go. What's everybody else doing? Where should we be? Should we stay? Should we add to it? Should we find a different way to buy insurance, different way to have risk transfer so we can better protect ourselves? That's today's conversation.
and just
Yeah,
a
100%
question that,
agree. I mean, there's sort of this, there is a me too factor in this. Like, you know, what is everybody else doing? That, you know, kind of gives you comfort that, you know, because you cut your limits in half or by 75%, you know, over the, you know, that 2018, 29 time frame. And now you're kind of thinking, you're looking at yourself with the rise in nuclear verdicts. Well, as a large company or even a mid-sized company, I mean, what is the right thing to do? And, you know, we could model losses all day long and look at what that impact might be on your insurance program. And then absent your insurance program, how does that look in terms of being able to just pay for that loss if you had to put it on your own corporate balance sheet? It's a scare. I mean, it's a scary time for everybody because, you know, as we started the conversation, there's very little to say that the environment's changing for the better. As a matter of fact, I would argue it's continuing to get worse. I think we had a brief pause with COVID, as we all kind of suspected there would be. And I think, you know, post COVID, now that the courts are fully open, I think that the stuff is accelerating even faster in terms of these bad verdicts.
Well, and unfortunately, we're kind of talking about large carriers here. We're missing the larger picture, which is smaller carriers, which obviously have smaller limits, right? And with that comes less resources, and we find too much stuff as being fast tracked. You know, we're not probably properly qualifying drivers. Equipment's not being maintained as it should be because, well, we know it's a tough market out there when it comes to freight rates as well. So we're seeing all kinds of shortening in different areas, which is, well, it's going to come back to haunt us. I just want to touch on real quick the incident that happened in Florida several years ago to the tune of, oh God, what was it?
$1 billion
Almost
or
$1 billion. Yeah. You know, it was ridiculous. The two carriers that were involved, each of them had less than 5 power units.
Yep.
So there was no money to be had for anybody out of that. The only people that won were the lawyers to be able to say, we got $1 billion verdict. Yay. But nobody collected, barely $1 million.
It's a shame. I mean, and that, I think, one of them was a Canadian carrier and the other one was a US based
Yep.
carrier, and they're both,
Yep.
I think the Canadian carrier might still be in business, but the other one is definitely out of business. And that's, when you're a small carrier like that, you're absolutely right. I mean, trying to buy insurance on a single power unit, or if you have 5 power units, you don't have the resources to go into looking at different deductibles and that sort of thing. I mean, you're just hanging on for your life, trying to find and get, decent drivers to put into those seats, and then hopefully you have enough money left over to invest in some cameras.
Well, and sadly enough, a lot of these small carriers are thinking, I'm being ripped off. My premiums are too high, and in comparison to what? Like, you are one of the riskiest operators out there. So with that thought process, what can motor carriers do differently? What are some innovative ways that they could manage it? And you kind of touched on it there real quick, Craig, when you said cameras.
Yeah, technology of any kind, preferably technology that is engineering safety, like automatic emergency braking, things that don't require a lot of interaction. So they're passive systems. That's number one. And of course, we're seeing that is going to be the likely legislated situation coming up, just like roll stability control or electronic stability control was back in 2014, which is great, but it's not legislated yet. And a lot of people have
Right.
pricing in the value. And even I'd say 10 years ago, it had no residual value. So you'd buy a truck that might have that technology, but you didn't get the value when you sold the truck back.
Right.
I think
Right.
that's a lot different today. So I think there's a different equation as you evaluate that technology. And it certainly impresses underwriters as well to be able to speak to the fact that you have those passive systems. And those active systems, now we're into the cameras and being able to monitor your drivers. More importantly, the internal feedback to the driver, because the driver's the only one that can use the information right now. So
Right.
if it's
Right.
lane detection warning, it's giving, sometimes it feels like too much feedback. I get it. But receiving the feedback and putting you in a position where you can make better decisions is number one. Number two becomes the ability to monitor driver behavior for those fleets that have multiple drivers and those kind of resources.
Yep.
Oh, we lost Craig there.
Well, Craig got a little older on the swim kickball. There he is.
We're back. That's cool. We
Sorry,
can edit that
I
out
don't know
easy enough.
I'm in my office. I guess the Marsh may have forgotten to pay the internet bill. I'm not sure. Very strange.
So we're just talking about technology and uses of technology. What are you seeing out there in the way of technologies or anything? What's new and innovative? Do you see something out there that is impressing underwriters?
Well, there's a lot of check the box kind of approach going on and has been for a little while, meaning you don't have cameras, you may not get a quote. It's the price of admission. Table stakes, as I think Craig likes to call it. You're not, there's no discussion to have unless you can check that box.
Right.
That's number one. And there's more and more of that going on. But the use of it, I think, is where we'll see more emphasis in the future. All right, you've got it. Now prove to me that you're using it.
Yes.
I think
Want to see some tangible results.
I mean,
Exactly.
I've seen some real good results with camera and the feedback mechanisms. Because as you're saying, Rick, really, cameras don't do shit unless unless it's used and the feedback
Yeah.
goes to the driver and the driver changes behavior. Like, it's kind of simple, but
there's people on our side of the table who have chosen to put some of those cameras in their own units to see how effective they are. And what's been interesting to a person that I know that have done it, it's all being done informally. It's just kind of an educational thing for themselves.
Sure.
Of course, working with the provider, they want to hear the feedback and all of that. But to a person, they thought they were a great driver, but they're being told a little differently. And it's really kind of a funny moment for everybody to realize maybe I am a little faster in turns than I need to be, or maybe I am rolling through that stop sign when I really thought I stopped it. There's not a person yet who hasn't said, actually, I'm a better driver now for having that.
Yeah,
I
it's
know.
it's almost like I have one of my kids is starting to be the learning driving age, and that's like the worst person to have in your car with you is when they start going through driver's ed. No, Daddy, you just rolled that stop sign. Hey, you didn't come to a complete stop. You didn't look both ways before making that right turn. I'm like, they're probably almost as good as having a camera in the car.
Yes,
But yeah,
yes. Exactly.
behaviorally, it's funny. I mean, anecdotally, I remember, back 10 years ago when cameras were really just starting to get into vehicles. And I would have so many clients tell me that when they implemented cameras for the first time and they're all watching the footage and they're like, damn, I thought John was our best driver. He just is our luckiest driver. He's actually a train wreck, and
Yeah.
it's like
Yep.
the eye-opening. And of course, now today, most fleets are very used to that sort of cameras and that sort of initial phase. And I think if Rick hasn't already touched on it when I was trying to reboot the internet here, the ones that are really cool today, I think, are the self-coaching AI ones where
Yes.
there's not an inward-facing camera, but there is a lens, and it looks at the driver distraction component.
Right.
There's an AI component that helps sort of, train the driver on as you go. And I think as Rick, would point out, it's not just the AI. I mean, you still need that in-person piece. So the better camera providers, not only have the AI, self-coaching, but also have the ability to implement, an alert to say the driver dispatcher, driver manager, that sort of thing. So that there's not only that in-cab immediacy, but there's also the post-drive or post-ride debrief where, a driver manager is able to say, hey, look, you had X number of incidents of distraction. What's going on today? Particularly if that driver wasn't somebody who was always on the radar before. And I think that's sort of, another area where I think the new technology, it's not just the cameras. Rick said the cameras don't do shit. It's what you do with the camera data. And the companies that Rick and I have been sort of investigating, the better ones are the ones that really can take the load and burden off the driver managers and sort of help to provide more insights into, okay, here's your top 20 drivers that you got to focus on. Don't assign everybody the same training because not everybody needs the same training. So by having the ability to take the coaching aspects of these camera systems and then assign the individual drivers what they truly need, like dad needs rolling stop I've got rolling stop issues. So I should get training on rolling stops. I don't necessarily need training on, speeding because I don't speed, right?
Right.
So it's kind of a thing. So I think that's what the really cool stuff about technology is today.
Well, and some of the technology that's rolling out can automatically send the driver the appropriate training as well.
Right.
That's right.
Now, how does that? So if I was a carrier and I had these cameras or this technology installed, and it's training my drivers through automation, how does the underwriter look at that? Is that, because I'm going to spend money. Is it going to save me any money in the long run?
No, number one question. So back to avoiding nuclear verdicts. We didn't use that term. Avoiding nuclear verdicts starts with the industry and having less accidents, right? So that's always the answer on, is the technology going to give me less accidents? That's number one. And accidents take a while to develop into dollars. So there's not an immediate return, which will drive a trucking executive crazy because everything else in their life nearly is an immediate return. Invest in this, I get it back this way. And this has the longest tail. It's close if it doesn't, but it takes some years to get that ROI back. And that is truly a challenge. To the extent that underwriters find value in it, historically and forever, it's really been, well, if you're having less accidents, it'll show up in your loss runs. And if it shows up in your loss runs, you'll have less insurance. So the whole discussion that we're having is, well, if the information, the technology is giving you what's called a leading indicator, meaning more of these events equals more accidents, meaning less of these events equals less accidents. If that's true, you should be able to prove that somehow, right? I think that's what the underwriters are waiting for. As a group, we haven't turned out a lot of great data. We could say cameras, put them in, they save you 30 to 60%. Well, that's a little soft for what an underwriter needs, right?
Craig, thoughts?
Yeah, no, I think it's to Rick's point. I mean, you got to have the compelling data because the the default for the insurance industry is, well, just give me, your last 10 years of information and, we'll put it in our black box, swing a cat around it and then come out with a number. And, remarkably, whether you're a fleet, let's just say you have three fleets that are all of the same ilk. And remarkably, their number is going to be pretty darn close to one another, even if one guy has slightly worse experience than another fleet. And really the default mode is in the insurance industry, as Rick said, you're all going to be painted with this tainted brush because you're in the trucking industry until you can prove me otherwise wrong.
Right.
And
Right.
even there, the challenge is the industry is just waiting for your next worst accident and they're going to price it accordingly. You could tell the markets that you got all the bells and the whistles and the driver assistance technology in your trucks, the telematics in your trucks. And the underwriters love that. They'll eat that up, all day long. But as Rick says, until you can illustrate that in real hardcore numbers to an underwriter and say, no, wait, look, we're not just talking about it. Here's the chart. Here's my reduction in frequency. Here's the reduction in my average severities. Then you're going to start piquing the underwriter's interest. But I think, you're still being grouped macroly into this commercial auto trucking bucket that is going to be very difficult to overcome in terms of just what a baseline cost is going to be,
Right.
and the variability on that baseline cost for somebody that's really good versus somebody who's really bad, or somebody that's really good, technology versus somebody that's just now investing in technology. That's where you're going to see some variability. But again, it's not like, the trucking executive is going to run home and say, yeah, I got a great deal and I feel good about it. Everybody's saying the same thing. Free market sucks. Drugs market sucks.
Yep.
And I get no respect. I'm Ronnie Dangerfield. That's sort of that's sort of the mindset, unfortunately.
Exactly. Well, we've seen the insurance market over the last whatever decades and whatnot has always been historically based. We're starting to see uptick with some new insurance providers in a user-based approach. What are your thoughts on that? The technology joins in with the user-based approach. Where do you think that's going? When do you think we're going to see that more rampant in insurance providers?
Yeah,
Good, right?
yeah. I was just going to say, we are working on. We have we developed this road facility. It's partnering with Inigo and Samsara. And really it's about how much data mining can you do as an insurance company based on the telematics information that's coming back. And that is relatively real time. So, we're taking a data set, a macro data set. So you have your big data lake, and then you start looking at individual type, what they refer to as data tokens. So whether it's hours, geography, driving behaviors, maintenance issues, and how can we take those data points and really look at fleets that are performing better because of the usage of that data. And then if we can take that information along with, my mileage information and some historical data from a driver perspective, we can probably build a much better mousetrap that would cost less upfront, and be long-term, more sustainable and predictable. Because that's ultimately what an insurance company wants. An insurance company wants to say, look, I want a risk that I know long-term is going to have an improved trajectory. And, I think we all know there's only so much juice you can squeeze out of a lemon, but at the same time, you don't want to see the reverse occur where, you kind of get that initial sort of, interest from the drivers and from the management and the technology. So you definitely see that initial decrease in frequency, severity, et cetera. But it's how long can you sustain that? And that's really where I think it goes back to, you can't just rely on the machinery. You got to go back and make sure and reinforce that training and so forth. But that is what the insurance companies are looking for. And, the insurtechs, those are the ones that are really reliant on sort of the technology base. Yeah, they're all about usage based. They're using some form of telematic camera systems to help that underwriting process. We're trying to do that on a more macro basis in terms of trying to parlay that into what we refer to as that umbrella and excess capacity, because that's really where we find the market has more or less been vacated, except for a very small few players. And, again, it's nascent. It's people willing to invest in technology and willing to see sort of how that plays out on a long-term basis. But yes, there is definitely interest, and the insurance industry knows there has to be a different story. We can't just continue on. That is the definition of insanity, right? We just continue to keep doing the same thing. We keep doing it without it changing.
Well, but this is where it's a great opportunity for motor carriers to get on the bandwagon now, work with their insurance partners like brokers like Marsh and whatnot to implement these strategies and programs so that the deliverables can be provided to their insurance providers, the insurance companies and whatnot, to be able to say, we are making a difference. We are able to show. And at the same time, hey, we're getting an ROI on the other end.
Oh,
Exactly right.
I really think trucking companies do a terrible job at marketing their strengths to insurers. And using technology would be one of the ways that they could differentiate their company from everybody else and perhaps get a better return. Does that kind of lead us in, as we've got to wrap this up in a minute or two? Marsh Road Transport Facility. Who wants to handle that one and say, well, this is what Marsh Road Transport Facility is all about?
Craig, go. So I got to I joined Marsh this year into what I thought was an amazing idea, and Craig was a big part of it. So Craig, take the lead on that and I'll supplement as we go along.
Yeah. I mean, it's exactly what we want to do and what will transform, I think, the industry writ large in terms of how they approach risk and underwrite risk. And that is relying on the here and now data and having direct linkage between what is coming in from the telematics data, what is residing in the, motor carrier's internal house from a safety standpoint, and saying, look, we're not just talking the talk. I mean, we're actually working day to day, understanding what the data is, and then using that data to have direct, individual, bespoke, conversations with our drivers, which is changing our risk profile. And for companies that are willing to do that and willing to make those ROI investments, there is an insurance outcome for that, which is this new road facility we refer to. And again, it is a partnership with a technology provider and a insurance company out of Lloyd's of London to provide this new product. And again, it was prepared for the trucking industry because that's obviously been the most distressed. But as the contagion of nuclear verdicts has spread beyond dedicated for hire trucking, it's really targeting not only just the for hire trucking space, but it's targeting really private fleets that have large private heavy truck operations. So, because it's unfortunate that now the insurance industry just sort of looks at fleet as it's a challenging risk environment. And to your point, our clients probably don't spend enough time talking about what they're really doing.
Right.
And this product, again, if they're making the proper investments, will give them a heck of a lot greater visibility into what's going on inside the truck, as well as, helping to leverage that with the insurance market.
Well, I was going to say one of the added bonuses here is, and we're starting to hear more of this. So to kind of go back to what Rick mentioned in the beginning, nuclear verdicts. And if I can't find enough money in that transportation pocket, I'm going deeper. So I'm going to look at the shipper. I'm going to look at the receiver. I'm going to look at the freight broker. Where'd the freight come from? So this is a great opportunity for small carriers, particularly, and mid-size even, doesn't matter, any size operation, to do a better job and utilize this tool, not only to market themselves to the insurance world, but also to their clients, to be able to say, this is what we do, not only to make ourselves better, but also to protect you from that inevitable that could happen. And we've seen so many of these nuclear verdicts where it was not the transport truck's fault. You just happened to be there at the right time, and the jury decided, boom, you're getting slapped, right? And no company that wants to move their product wants to be associated with a trucking company that is all over the front page news, So knowing that, wow, these guys are doing a better job. They're managing that risk. They're utilizing that telematics would help those shippers and receivers and clients pick a better carrier.
That's what I love about this facility, because Inigo's all in on bringing that data back in front of you, right? So let's face it, if you're a trucking company, you're good at trucking. You're not necessarily good at data management.
Yep.
Or on such a thing. So fortunately, Inigo has a ton of data scientists, and they're willing to benchmark all that data and bring it back. And because they're using just limited data fields, and they're the same data fields in everybody that has Samsara units, it's accurate benchmarking. So they've shared a number, just as an example, that I think it's 120 hard brakes equals an accident. So what they have, Samsara has the data, but they're also receiving the loss run. So we're in a seat right there. So's the motor carrier. They're just good at it right now.
Yeah.
So there'll be some lessons learned, I think, for everybody that adopts this product and gets that benchmarking back from Inigo. It's different than what you get from anywhere else, because it's been through that process and it's been compared to all the other submissions they've gotten. So I think there's a lot to learn here. And we don't do a great job. I'll see a presentation that's often put together, and it's about 80 or 90% on the business. This is the Reinoehl presentation, from those truckers that get in front of their underwriters and do a presentation. 80 or 90% about the business, and there's one slide talking about their partnerships. But no data at all. Well, they haven't had the data. It's understandable. And frankly, we do the same thing with juries. The plaintiff can make up whatever they want. Say every hard brake was essentially an accident, and you should have fired the guy after 2. Well, they're just making them. They have no idea, but we don't do a good job countering it. So I think as this data comes out, really ties those leading indicators to accidents and puts us in a position to talk about it with underwriters, customers, as you said, and juries. I think we're ourselves in a much better position. So to me, this is thrilling. Like I said, I was so glad to walk in and see all this great work to get put together.
Cool. Well, like you say, it's benchmarking.
That is the Marsh Road Transport Facility. So for our listeners and watchers, if you want more information about it, should they reach out to Craig and Rick?
Absolutely.
Perfect.
We're easy to find. We're on the Marsh website, or you can probably just do an internet search for us. It's pretty easy.
Your info will be in the show notes down below. So it will be kind of easy for anybody who wants to reach out to Marsh and to Craig and Rick in particular. Your info is down below, so do that and reach out. That was a great interview. Thanks, Craig and Rick from Marsh US. And if you got value from it, please click a like and subscribe, and we will see you next week. That's all.